All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Wednesday, everybody. Today is July 9th, 2025, and we're starting the morning with a metal at an all-time high. It's not gold and it's not silver, sadly. It's copper, of all things. Dr. Copper is making an ATH this morning after President Trump, well, he did what President Trump does. He came up with another tariff, and he just kind of spit it out there. And now the market is digesting it. Everybody's trying to figure out what it's going to look like. Yesterday, midday, President Trump announced his plans to implement a 50% tariff on copper imports into the United States. And, well, the market is reacting rather strongly to that. We had copper futures here in the U.S. hit an all-time high very quickly. They've come down off those initial panic highs, but still elevated. And at the same time, while copper in the U.S. was hitting an all-time high, copper in London was selling off. And the London Metals Exchange, that's where most of the copper trade happens in the world. So what was going on? The same thing we saw with gold and silver in the first quarter of this year. We saw traders trying to front run those tariffs. So they were going into London, they were buying their copper, selling it in London, moving it over to the U.S., causing a drain, traders trying to front run. And so you got metal flowing into the United States right now. I don't know where this one goes long term. As with most of the other tariffs, I seriously doubt the final level is going to end at 50%. If we end up with any tariffs at all, you guys may have noticed over the last few months, the whole tariff thing has been somewhat unpredictable. I think that's an understatement. I think we can all get down with that. So where does copper go? I don't really know from here. But I can tell you the U.S., this is not as big a deal as some of the other things. U.S. imports a third to half of the copper that we use. We source most of ours domestically. Interestingly enough, the biggest exporters of copper to the United States, the people we buy most of our copper from, Chile is the biggest source by far. After that, Canada and Mexico are the next biggest sources. So these tariffs on copper could potentially exacerbate some of the tensions between the U.S. and Mexico and the U.S. and Canada, where there have been plenty of other arguments centered around tariffs. So the market is trying to digest this one this morning. Not sure if this means anything different for gold and silver. A lot of silver comes out of copper mines, so maybe there's some knock-on effects that could happen there. And we still don't really know. Bullion products like gold and silver and the platinum group metals have thus far been exempted from the tariffs. Does that mean maybe we're going to be putting those back on the table? I don't know, possibly. Nobody really knows. Nobody knows what's going on with tariffs. But hey, today's July 9th. Today's the deadline, right? Remember they tacoed on April 9th after Liberation Day, and they said, no, you know what? July 9th is going to be the new deadline. Well, it's here. We got some of those letters went out earlier this week. I'm sure there's going to be more tariff announcements later in the day, and there's probably going to be more announcements of more delays, more negotiations, rinse, repeat. Other things going on in the United States. Yesterday, midday, we got some data about the early hours of Amazon Prime Day, and it wasn't so good. Spending during the initial hours of the annual big Amazon event were down 14% year over year. That's according to Momentum Commerce, which tracks Amazon Prime orders. So what's going on with Amazon? The stock was down a little bit yesterday on this news. You've got consumers strapped by inflation. People are not eager to run out and buy expensive electronics right now, not when they're struggling to pay for the necessities. And at the same time, you've got sellers who are being clobbered over the head with tariffs right now, and they're not exactly eager to cut their prices while tariffs are eating into their margins. And so we're seeing kind of like lackluster deals. There's just not that many sales to be had here. There's all kinds of articles out this morning. People are saying, use AI to find the best Amazon Prime deals. Okay, good luck with that one. At the end of the day, people don't have money, so Prime Day is probably going to be something of a dud this year. And we've got the Battle of the Kevins. I love this story just because it's two Kevins. I don't know why. It just kind of cracks me up a little bit. Who's going to be the next Fed chair? It's kind of an important thing. And, well, on the next episode of Federal Reserve Apprentice, it's going to be Kevin Hassett versus Kevin Warsh. That's according to the Wall Street Journal yesterday, who announced that they are two contenders for the next Fed chair. A third being current Treasury Secretary Scott Bessent, who a lot of people think was the front runner, but the journal's saying it's one of these two Kevins. The first, Kevin Hassett, he's the National Economic Council director under Trump. He's one of Trump's inside economic circle people. He's been one of the leaders of all of these trade negotiations along with Secretary Bessent. So Kevin Hassett as a Fed chair would very much be a Trump plant, right? He would be put there to do what Trump wants. The other Kevin here, we're talking about former Fed Governor Kevin Warsh. He's more of an outside shot here because Kevin Warsh was a hawk. And one thing's for sure, President Trump wants a dove as the next Fed chair. So I'm a little surprised to hear that Warsh is even in the running here, especially considering that he passed over Warsh for Fed chair when he appointed Powell during his first term. Either way, the next Fed chair is going to wield unimaginable power over the rest of the world. It's kind of a big deal, but I'm sure like everything else, it's going to be a circus that plays out in the tabloids. Meanwhile, we've got the Bank of England is out this morning with a warning about the gilt market once again. There's been a lot of noise in the gilt market over the last few weeks. This time they're worried about the hedge fund basis trade. Now, the hedge fund basis trade, that's when a hedge fund buys a bond and then they sell the corresponding future for that bond. So their net positioning should be zero. You got one long and one short of the same thing, kind of. But they're just harvesting that arbitrage, that time decay of the future, and they're basically picking up pennies in front of a steamroller. As long as there's no volatility, it can be a very lucrative trade. It's basically a short volatility trade. But during terms of market turmoil, such as those we are currently in, at least in the UK gilt market, those basis trades can blow up in the blink of an eye. That's actually what happened during COVID, was ultimately what led to the Federal Reserve beginning their quantitative easing program, printing the trillions of dollars. It's because the basis trade in the United States was blowing up and it was causing the bond market to basically collapse. And as always, the bond market gets what the bond market wants. By the way, yields in the UK and in Japan and in the United States are higher once again this morning. Keep an eye on those long-term interest rates. And while we're sitting here with stocks pretty much at all-time highs, we've got some interesting posts I found on Twitter this morning. Retail traders in record numbers are piling into leveraged single stock ETFs. Basically, ETFs made up of a stock, call options in that stock. And they're doing it with margin loans. It's cool. That's good luck with that. Good luck with it. What stage are we in? I don't know. Talk about trades that are going to blow up all at once. We've also got more deflation talk in China. They got their PPI report this morning, negative 3.6%, worse than expected. The deflation problem in China continues to get worse. And China is building a massive data center. And that data center is going to use 115,000 advanced NVIDIA GPUs that China doesn't have. Remember, they don't have them because it's illegal to sell them. How are they going to do this? Anybody? Somebody want to explain to me how China is going to build their data center with 115,000 GPUs that NVIDIA and Supermicro and Dell all swear up and down that they're going to Singapore or Malaysia and not to China? It's interesting. We all know it's happening. We're just pretending it's not happening. But apparently the Chinese are just doing it anyway. We got a lot to talk about this morning. Why don't we shrink my big melon of a head and let's see what's happening in the world of finance. As always, please hit that like button. And if you're new here, hit that subscribe button and come on back tomorrow because we do this one every day. So come have your coffee with the melon heads as we go through markets. And right now, the S&P 500 is in positive territory once again. Number go uppeth, higher by about 21 points or about a third of 1%. We've also got the Dow is looking pretty good this morning, up 181 points, 0.4% higher for the Dow. Meanwhile, the NASDAQ is just barely positive here, 5 points to the upside, 0.03%. So stocks are up across the board. The NASDAQ lagging a little bit. And we've got a dollar that's pretty much unchanged here. It's showing higher by 1 basis point, 97.51. Looks like we started to drop a little bit at 8 a.m. and we continue to fall here. And looking over at the bond market, we've got yields are actually a little bit lower now. The 10-year was positive right before we went live. The 30-year Treasury at 4.925. That is down by 2 basis points. The 10 years at 4.393. That's down by 2 points and change. The 2 years at 3.889, off by 2 points. And the 1 month is pretty much unchanged, 4.302, down by a fraction of a point. Bitcoin this morning is looking pretty good here, $109,747. That's the asking price on Coinbase right now. That's higher by about $750 versus yesterday. Still not quite that 111,000 all-time high. Got a kind of an interesting story in Bitcoin this morning. Airline giant Emirates to accept Bitcoin and crypto payments for flights and services. This one is in Crypto Briefing this morning. Crypto.com, one of the earliest players in the crypto space, has struck a deal with Emirates, one of the world's most renowned airlines, in a bid to bring crypto payments to mainstream global travel, according to a press release issued on Wednesday. And won't Matt Damon be just delighted? Remember, Matt Damon was the Fortune Favors the Brave spokesperson during the Crypto Bowl right before the last crypto winter set in. So maybe we don't get Matt to do the ads for this one. As part of a memorandum of understanding signed on July 9th, the parties will explore the integration of Crypto.com Pay into Emirates' global payments infrastructure, enabling millions of customers to pay for flights and other services using digital assets. The rollout is targeted for next year. All right, so we've got a memo of understanding that we're going to explore to maybe hopefully do payments. So this isn't going to be a big spike in adoption overnight here. Also, no word on what coins will be accepted or won't be accepted. I'm sure a lot of you are just very eager to pay for your next flight to Dubai with your fart coin holdings. Looking over at the commodities board this morning, we've got gold and silver are down a little bit here. Spot gold is under 3,300. We're at $3,298. That's off by about $3 or 0.1% lower. Spot silver, meanwhile, $36.37. That's lower by about 39 cents or 1% to the downside. But I still like the shiny, as you may have surmised by now. Copper is actually showing down this morning. It's down versus where it was yesterday, which was an all-time high. September copper futures, $5.59. That's off by 9 cents or 1.5%. Put a pin in copper. We'll look at that chart in just a second. We've got platinum is lower by 0.6%. Palladium is up by 0.25%. And WTI crude oil, $68.03 for August WTI futures. Back on copper, let's talk about this one. This was a big one yesterday. U.S. copper prices surged to record as Trump calls for a 50% tariff. Copper futures in New York surged after U.S. President Donald Trump said he planned to implement a 50% tariff on imports, a move that's likely to spark massive supply chain ripples through global metal markets. Contracts on the COMEX climbed as much as 17% on Tuesday, a record one-day spike, before falling more than 4% in early trading on Wednesday. The New York price commanded a massive 24% premium to equivalent futures in London, the market that sets global benchmark prices. The New York price traded at $5.50 a pound at 8:23 a.m. in Shanghai, while copper in London traded at $9,627 a ton. By the way, Bloomberg, way to do an apples to oranges comparison, giving us the price in pounds for New York and then tons. Divide by 2,000. Basically, the U.S. price was a lot higher than the London price. Just kind of annoying the way they wrote that. If tariff takes hold, the measures are expected to inflict higher costs across a broad section of the U.S. economy due to the myriad of industries and applications that rely on copper. The metal is used in everything from consumer electronics and automobiles to home construction and data centers. In other words, the price of a lot of things would go up domestically if this comes to pass. Copper, with the exception of oil, copper is probably the one commodity that inputs into inflation more than anything else. Maybe natural gas more. Honestly, I haven't done the math, but copper is a big one. Copper's got a big input into most consumer products. In the meantime, there's likely to be dislocations in the market. Given the significant U.S. premiums, traders have been shipping record volumes of copper into the U.S. in recent months to front-run any possible implementation of tariffs. And the fresh spike in COMEX prices will create an added incentive to move any final shipments of metal there quickly before the levies are introduced. And I just want to scroll down the last paragraph here. The U.S. consumed about 1.6 million tons of refined copper in 2024. That's according to the U.S. Geological Survey. While the U.S. has significant mines producing some 850,000 tons of primary copper last year, it still relies on imports from key trade allies to fill the need. Chile is the largest import source, accounting for 38% of total U.S. import volumes, followed by Canada at 28% and Mexico with an 8% share. Net copper imports accounted for 36% of demand, according to Morgan Stanley research. And just taking a look at that copper chart here, you can see a big move yesterday, all right? Big one here. Moving again this morning. Copper just got a lot more expensive in a hurry there. Biggest move we've seen. I mean, the only thing that matches that move was the sell-off in copper that we got following Liberation Day, an equally large move happening here. If we zoom out on this, like let's set this to 1 week candles on this chart here, you can see this is an all-time high. The data only goes back to 1999 on this chart here. So we'll see, guys. This is probably going to be inflationary. I know a lot of you guys are like, when is the tariffs going to show up in inflation? Well, guys, a lot of the tariffs haven't shown up yet. We're still only 10% tariffs on most things, and those prices still haven't filtered through to consumers. This will work its way up the supply chain. If copper gets more expensive, the things with copper in them will certainly get more expensive right along with it, or production will decline. Amazon Prime Day spending is down 14% in early hours from 2024. This is a big one from yesterday morning. Amazon's Prime Day sales fell almost 14% in the first 4 hours of the event compared with the start of last year's sale, according to Momentum Commerce, which manages 50 brands in a variety of product categories. Prime Day stretches over 4 days this year, up from just 2 days in 2024, making year-over-year comparisons tricky, and shoppers could be holding off in the hopes that discounts will deepen as the sale proceeds. But the initial hours are still seen as a key indication of its performance. Momentum, which manages Amazon sales on behalf of brands like Crocs, Beats, and Therabody massagers, generates about $7 billion in sales annually on Amazon, giving it a large sample to assess Prime Day. In 2024, Prime Day sales spiked on the morning and evening of the first day, and then again on the evening of the second day. This year's 4-day event will spread sales over a longer period. So again, not really an apples to apples comparison, but a big decline regardless. Amazon was down almost 2% yesterday on that news. We're gaining some of that back this morning, up 0.8% ahead of the opening bell, trading at $221.13. And meanwhile, we've got two Kevins duking it out for the next Fed chair. Two Kevins battle to be next Fed chair in Trump's Apprentice-style contest. Honestly, I don't know why they're saying Apprentice-style contest. I think they're just making a reality show comparison here. There hasn't been anything like The Apprentice going on. They're just, I don't know. They just really wanted to use that analogy, I guess. Two Republicans named Kevin are vying to be the next chairman of the Federal Reserve. One is rising to the top of the list of potential candidates, while the other is facing skepticism from President Trump's allies. Kevin Hassett, one of Trump's closest economic advisors, is emerging as a serious contender to be the next Fed chair, according to people familiar with the matter. Hassett's rise threatens the other Kevin, former Fed Governor Kevin Warsh, an early favorite for the job, who was angled for the position ever since Trump passed him over for it 8 years ago. Some people close to the president worry that Warsh, who isn't in Trump's inner circle, won't be a champion of lower rates, which he won't. Warsh is something of a hawk. What is unfolding is quintessential Trump, two ambitious men competing for his approval in a high-stakes contest that echoes the boardroom drama he once promoted on The Apprentice. Look, if it was just down to these two candidates, I would guess Kevin Hassett is the most likely Fed chair, just because Trump is not going to put a hawk in there. Trump wants lower rates. Trump wants somebody who is going to do what Trump says in charge at the Fed, hence all the worries about Fed independence. But you know what? While we're on this subject, since we're talking about two Kevins, might I suggest a third Kevin who is actually the ideal candidate for the job, and that's this guy. If you really just want a Zerpenber and you really just want the Fed to lower rates to pump my stock bubbles higher, well, then what you're really looking for is just a mindless minion to do your bidding. So why not put this Kevin in charge at the Federal Reserve? Better yet, let's just not have a Federal Reserve at all. I just throw it out there. You guys do what you want with it. Meanwhile, that other central bank, the Bank of England, warns of gilt risks from hedge fund leverage. This is something that has blown up in the past, and it could blow up again. And the central bank's like, well, I guess we better warn about this so that when it happens, people don't accuse us of being asleep at the wheel. The growing role of hedge funds in the UK bond market is raising the risk of destabilizing sell-offs, the Bank of England said Wednesday, with officials warning the opaque nature of their trading activity exacerbates the threat. Hedge funds are borrowing a record 77 billion pounds, it's about $105 billion, via gilt repo agreements to add leverage to relative value strategies, including the so-called basis trade. The central bank said in its twice-yearly financial stability report, funds use such strategies in order to exploit price differences between cash bonds and gilt futures. A small number of hedge funds amount for 90% of that borrowing, meaning an unwinding of that trade by a few key players could reverberate through UK markets, the BOE warned. What's more, officials say they lack the visibility necessary to fully monitor threats from leverage funds because some institutions are domiciled offshore. Simultaneous deleveraging by large numbers of similarly positioned funds could trigger forced selling and feedback loops, the report said. Opacity can impede effective monitoring and risk assessment of leverage strategies. And that simultaneous deleveraging by a large number of similarly positioned funds, that's exactly what happened in the onset of the COVID pandemic that led to the ruction in the bond market, if you will, that forced the Fed to start printing money and buying up those treasuries. The report comes a week after the gilt market was hammered by a swift rout when speculation that Prime Minister Keir Starmer might oust his fiscal restraint-minded Chancellor of the Exchequer caused a brief exodus from UK assets. 30-year yield spiked nearly 20 basis points in the session, the steepest jump since U.S. President Trump's April tariffs unleashed havoc in global markets. And just a reminder, guys, that we're still having these problems in global bond markets. The UK gilt yield, okay, it was up just a few minutes ago. That one has reversed lower as well. It's currently lower by 1 basis point, so it's breaking the streak here of a few days in a row. These are one-day candles. The UK gilt currently at 4.621. And while we're on the subject, let's look at those long-term Japanese bonds as well. The 40-year Japanese government bond yield, that one is still higher by just 1 basis point. It has risen every day since July 1st, now 6 days in a row, 3.365 for the Japanese 40-year yield. So the ruction in the bond market, here's the U.S. 10-year yield chart. All right, it is down as well. So it looks like the steady rise may be taking a breather this morning. It's up for a few days in a row, down by a couple of basis points. We'll see where that one ends. But speaking of this story about the gilt market and how, simultaneous unwinding of leverage positions by multiple market positions in market participants in a crowded trade. Check out this. I saw this on Twitter. Shout out to FX Evolution on X. This is a new account. My friends at Macro Edge were sharing this one this morning, and I saw these posts. This is pretty interesting. Could this be the most disturbing chart of 2025? Retail are going all in big time. And I just want to open up this chart so you can see it a little better. This is cumulative net retail purchases of single stock leveraged ETFs as measured in millions of US dollars. All right, now the blue bars, that's the first half of the year. The gray bars, the second half of the year. So we're just starting the second half. So we finally have data for how much retail investors piled into leveraged single stock ETFs. And it was almost $3 billion was piled into these guys. These instruments are garbage investments. I just want you to know that. Leveraged ETFs, take any leveraged ETF and zoom out more than a couple of months, and they look like the inverted hockey sticks. I mean, they just go straight down over time. These funds are designed to lose money to time decay, and it's like the hottest thing on Wall Street right now. $3 billion, or nearly $3 billion, was pumped into ETFs made up of leverage bets on one stock in just the first half of the year. That is nearly tripled from last year, which in and of itself, it's up nearly 10x from 2023. Meanwhile, executives in all these leveraged single stock companies, the executives in the companies these ETFs represent, they're all selling shares like crazy, cashing out. But don't worry, guys, because these retail investors that are buying all this stuff, they're doing it with borrowed money, margin debt, hitting all-time highs again. This is the same guy, FX Evolution. And once again, shout out to my friends at Macro Edge who shared this with me this morning. We're buying all of these leveraged single stock ETFs with borrowed money. Now, remember we were talking about in the last article about the gilt market, how when everybody is in the same trade on leverage, you can end up with a sudden, violent unwinding of those positions. I don't know. Maybe there's something to learn from that in the context of people borrowing money to pile in a leveraged single stock ETFs. But hey, If you're making money on these things, congratulations, guys. Just be careful. Have a plan to get out and hope your plan is better than everybody else who's doing exactly the same thing you are. Shifting gears over to China right now. China's PPI came out yesterday, and it is down and down sharply. China's producer prices shrank by 3.6% year over year in June of 2025, exceeding market expectations of a 3.2% decline. And that's after a 3.3% drop in May. This marked the 33rd consecutive month of producer deflation and the steepest fall since July of 2023, driven by rising external risks amid uncertainty over U.S. tariffs and persistently weak domestic demand. Guys, China has a big deflation problem. Now, you're probably sitting there saying, wow, how can I get me some of that deflation problem? Because I'm sitting here struggling with the increased cost of living and the inflation problem we've had here in the West. But China is heavily indebted. At least important sectors of China's economy are heavily indebted, in particular their real estate market. And if you're up to your eyeballs in real estate debt, then deflation is the last thing you need because it makes things worse. And a lot of the reason why you're getting this consumer deflation in China is because the average Chinese investor has all of his net worth invested in real estate, and that has gone down. And because of the wealth effect, people studying how declines in home prices leads to declines in consumer spending more so than stocks or any other asset class. I warned about this years ago, that the collapse in China's real estate market was going to result in a collapse of consumer spending in China. And you can see it in their PPI numbers. And just let's zoom out on this. Look at a 5-year chart of deflation in China. You can see here, PPI has been negative for some time. We bottomed out in June of 2023. There was a little bit of a recovery. And by a recovery, I mean it never went positive. The highest it went was negative 0.8. And now it's falling again, probably going to fall even further. 33 consecutive months of price declines in the world's second largest economy. And speaking of China, they're building a big data center. And they're doing it with GPUs they supposedly don't have. China eyes 115,000 banned NVIDIA AI chips for massive data center. This one is in tip ranks. It's quoting a Bloomberg story from yesterday. China is constructing dozens of massive data centers across the country, aiming to equip them with NVIDIA's advanced AI chips. The news was first reported by Bloomberg, citing a review of government documents. Although China has set bold AI goals, its ambitions have been hindered by stringent export control rules imposed by the U.S. No, they haven't. There is no clarity on how the firms will source the banned AI chips from NVIDIA. We know exactly how they're going to do it. They're going to buy them from Supermicro using subsidiaries of subsidiaries that we all know is happening. Supermicro knows it's happening. Dell knows it's happening. NVIDIA knows it's happening. Everybody's letting it happen because they want their stock to go higher. China's been buying these things without the slightest problem. Everybody knows, we can see it. I did a video a couple of months ago showing warehouses full of Supermicro servers loaded with NVIDIA H100 GPUs, including a guy holding up an NVIDIA H100 GPU saying, here is my illegal NVIDIA H100 GPU. And still people are like, there's no proof that Chinese are buying GPUs. Gag me with that noise. Washington began implementing chip export bans in China in 2024, fearing their misuse of advancing military capabilities. The bans have become more stringent over time and now require government licenses for the export of some of the most advanced chips. While China is making these gigantic plans, sourcing NVIDIA's GPUs remains one of the biggest challenges. Importing such a large number of AI chips officially seems impossible because of the ban. However, the report suggests that Chinese firms may be strategizing ways to secure them indirectly, either through other countries, Singapore and Malaysia, or by sourcing them on the black market. Bloomberg also interviewed several individuals who might have knowledge of such covert operations, but none had any information. Maybe Bloomberg should just watch my video because there's plenty of information about how easily they're doing it in that video. But look, guys, the U.S. knows this is going on. The BIS has been tracking this. We all know it's happening. The DOJ knows it's happening. Wall Street knows it's happening. NVIDIA knows. Everybody knows. Everybody's doing nothing about it. The government has chosen not to crack down on this for whatever reason. Guys, this is treasonous. We know AI has military implications, and we know China is buying these for AI uses. And so NVIDIA, an American company with an American CEO, of Taiwanese descent who manufactures most of their chips in Taiwan is illegally selling this technology to the Chinese for military use. And what will the Chinese use that for in a military aspect? Almost certainly for an invasion of Taiwan, which would likely involve the U.S. military coming to their defense. In other words, this is treasonous crap, and we're letting it happen because we want the stock to go higher. We all know this is happening. They're just turning a blind eye to it. But I might add, Treasury Secretary Scott Bessent, if you really want to term out U.S. government debt, if you really want to stop issuing so many T-bills and take advantage of lower long-term interest rates to extend our borrowing, this is a way you could do it. Have the DOJ actually prosecute this obvious crime that is going on an industrial wholesale scale that defies logic and just amazes me that it's happening. The ensuing panic in the stock market will leave hundreds of billions of dollars looking for somewhere to hide. A lot of that will end up in the bond market, and you'll get those lower rates that you've been wanting to term out government debt. Hey, I just throw it out there. It is possible to term out the debt. You just have to sacrifice your stock market bubble to make it happen. And I just want to say thank you very much to Harmonair LLC for supporting the channel. Thank you, Harmonair. He says, I don't know about you, but my vote is for Kevin McAllister. Yeah, is that what we're going to do? Should I do my Kevin McAllister, this face, from Home Alone that everybody uses in their YouTube thumbnails because they think it gets them more clicks, but really it just makes them look like quacks when they do it. That's why I don't do this in my YouTube thumbnails. Everybody makes that stupid face. They think it shows emotion and gets you more clicks. I don't know. Kevin McAllister for Fed chair. Now we're thinking outside the box, Harmonair. I don't know. When those bond vigilantes come in trying to sell off U.S. debt, you can, put a hot iron on the door handle or put ice on the porch. Yeah, now we're thinking outside the box. There we go. Thank you, Harmonair, for supporting the channel. Robert Feeds the Machine says, if I were hiding wealth from my government, I would prefer not having to launder it into a bank account before flying. If I were hiding wealth, I would prefer not to have to launder it. Yeah, I mean, look, you don't have to. I guess we're talking about crypto. You don't even need to launder it. You don't need to travel with anything. All you got to do is memorize words. If you can memorize your seed phrase, then you don't even need to carry a wallet. You can just buy another one where you're going. So, I mean, when it comes to launder it into a bank account before flying, I mean, I get it that criminals use crypto. And that's kind of the most common criticism of crypto is that drug dealers and criminals and the Russians use it to sell their oil. Yeah, I get that. But criminals also use dollars. Criminals have always used dollars. All right. There's still probably billions of dollars of U.S. cash rotting underground in Colombia that freaking Pablo Escobar buried in the 1980s and forgot where he put it. And now it's covered in the dung from his hippos that are now running rampant all over Colombia because Pablo Escobar had this weird thing for hippos. That was all paid for by U.S. dollars. So like this whole thing, like criminals use crypto. Okay. Yeah. Criminals use a lot of things. We don't ban them because criminals use them. Police the criminals, prosecute the criminals. We don't prosecute criminals, though. We see criminals doing crime out in the open in public, and they just get away with it, right? White collar, blue collar. We just, like, rule of law is just disintegrated in this country at every level of society. You can walk into a store and just take whatever the heck you want, and as long as it's less than $900, you can get away with it. Or on the opposite end of the spectrum, you can embezzle $9 billion and get away with a slap on the wrist. We've just basically legalized crime. So, I mean, the whole crypto is used by criminals. They're doing things that are already illegal. Go after the things they are doing that are already illegal, not the crypto they're using. Anyway, that's just my take on that. Thank you, Robert Feeds the Machine, for supporting the channel. Harmonair LLC is back again, says being in the field of HVAC is not getting cheaper. No, a lot of copper used in HVAC, right? A lot of the coolant lines, a lot of the wiring associated with the HVAC. The motors that are used in those blowers and air conditioners for compressor motors, there's a lot of copper in those. The higher copper prices will definitely hit HVAC industry. Abso-freaking-lutely, Harmonair LLC. And thank you once again, sir, for supporting the channel. Kevin DeBella says, Trump already promised to make me Fed chair. Another Kevin has thrown his hat in the ring. Ring. Kevin DeBella for Fed chair. Sure, why not? Any excuse to don the tinfoil hat. I hereby nominate Melonhead Kevin for Fed chair. Good luck, Kevin. print some money or something. I don't know. Pump my stock bubble. Thank you, Kevin, for throwing your hat in the ring. Why not? M&J says, should we look at Meet Kevin? Oh, okay. Yeah, all the Kevins are now Fed chairs. How about the committee of Kevins? The many Kevins. Meet Kevin for Fed chair. Yeah, why not? Sure. That'll speed us on our way to success. Yeah. FTX, BlockFi. He's still around. Gotta love it. Gotta love it. You lead people to the slaughter, and they still hang around. Thank you, M&J, for supporting the channel. Appreciate that very much for everything you do. And thank you, everybody, for having your coffee with the Melonheads this morning. Appreciate that very much. Don't forget that like button and that subscribe button on the way out for the algorithm, should you feel so inclined. And thank you also to my magnanimous Melonheads on YouTube and Patreon for supporting the channel. Everything you do, I appreciate that very much, guys. Links down below, should you feel so inclined as well. Hi, Mom. Hi, Dad. Love you guys. Don't forget that like button and that subscribe button on the way out. And until next time, live small and dream big.